when you file an objection, it's an appeal actually. The expectation is you come and follow up and etc. A taxpayer will go AWOL, completely mute. You call them, try and email them on the registered known addresses, and there is just simply no response.
You have 7 days within which to write your grounds for accessing ADR, and then after you can lodge your ADR application with the team at URA, and they usually get back to you pretty fast. And usually the supporting documentation you may have submitted at objections will be very useful for you to take the same to the ADR team.
Decisions have increased, but also the decisions that are really relevant to current practices have also increased. For instance, if you look at the latest decisions that have been dealing with international tax principles.
Hello everyone, welcome to the Tax Hub podcast, a platform where we deliberate, engage, and pick out on tax issues, fundamental topics, the latest trends, but we also get to break down and suggest any areas of policy reform, any areas of amendment, so that we can better our practice and better tax compliance. Welcome to episode 4 of the Tax Hub podcast. And joining me on episode 4 is a very distinguished panel of tax practitioners. And I think I'll introduce them, starting with the gentleman on my right, Bruce Musinguzi. Bruce Musinguzi, you're very welcome to the Tax Hub podcast. Thank you, Bruce. Bruce, our dear viewers out there would like to know who is Bruce that will be speaking to us this afternoon.
Okay, my name is Bruce Musinguzi. I'm a partner with Kampala Associated Advocates. I co-head the tax practice. Tax practice has Oscar Kambona as the head. We have a team of over 8 people in our tax practice, and our specialty is mainly tax litigation and also tax advisory. That's who I am. Thank you.
Thank you, Bruce. We're very honored to have Bruce. To those of us who read tax cases, every 10 cases you read, at least you'll find a case that Bruce has argued. So, Bruce, we're very honored to have you this afternoon. The second panelist we have this afternoon is Rhoda. Rhoda is coming in from KPMG. Rhoda, you're very welcome to the Tax Hub podcast.
Thank you, Edwin. Like he has said, my name is Rhoda. I have been with KPMG for the last 13 years. I'm a manager at KPMG East Africa, and I'm very excited to be part of the panel today and to also deliberate under the Tax Hub. Thank you for having me.
Thank you very much, Rhoda. We're very delighted to have you, and we look forward to very deliberate discussion. Then lastly is a lady who is very fundamental to the topic that shall be discussing this afternoon. She comes in from the URA 8 hours. She works with the Uganda Revenue Authority. Ruth Ann Agwang. Ruth, you're very welcome to the Tax Hub podcast.
Thank you, Edwin. Good afternoon. My name is Ruth, like he just mentioned, Ruth Ann Agwang. I'm currently serving as a manager for the independent review of objections at the Uganda Revenue Authority. I have had about 17 years of tax administration, and in the tax dispute management, I think I give it about 6 years. 6 years. So I'm excited to be here to share with you. And
thank you, Ruth, for making the time. We get to have a balanced debate where we get perspectives from the Uganda Revenue Authority as well as a team of experienced tax practitioners over here. So, ladies and gentlemen, that's a formidable panel that will be partaking of the discussion. And episode 4 centers around tax dispute resolution. Every time there's a taxpayer, a taxman, there's dispute. There's always ambiguity. There's always disconnect, which is always subject to different forums, different arenas where a taxpayer gets to tussle it out to the Uganda Revenue Authority. So we just deemed it fit to sit down and have a candid discussion where we break down these concepts. What should the taxpayer take note of? What are the latest trends? What's happening, and what should we take note of? So that's the discussion we shall be having this afternoon. And to kick us off, I'd like to bring in Ruth. Ruth, you head a very critical unit at the Uganda Revenue Authority, which starts most of these objections that we're having as taxpayers. Ruth, do you mind just walking us through what an objection is, what the process plays out like for our dear taxpayers out there to follow through?
Okay, thank you. Thank you, Edwin. So, like you mentioned, tax disputes are a usual thing. Conflict is a usual part of our lives. And so having an objection is just an expression of a taxpayer that they're not satisfied with a decision that URA has taken. Now, that decision could be in any form. It could be in the form of a tax assessment. It could be in the form of a decision by URA not to either grant a certain request by the taxpayer. So anything that a taxpayer is not satisfied with is now deemed an objection if they lodge that dissatisfaction. So we have, it is a constitutional right, by the way, and also the tax laws of Uganda do take care of that. And so when a person is not satisfied, they can lodge their dissatisfaction through an objection. And right now, URA is almost 100% electronic. So we have a prescribed form. The tax laws describe how best a taxpayer can lodge their dissatisfaction. However, important to note is there are few unique circumstances within which a taxpayer may manually object. So basically, objecting is through a prescribed form electronically. However, in the unlikely event that electronic cannot happen, such as stamp duty is purely manual, a taxpayer may proceed to object within the manual process.
Thank you, Ruth, for that kind introduction. I think Ruth has clarified what an objection is and what it entails. But Ruth, maybe just to dig in a little deeper, how would you advise the taxpayers out those ends to handle the objections? Do I just file and that's all I wait for my decision? How practically should our taxpayers see to it that the objection process is handled in its entirety and we have a decision ultimately? Do you mind just walking us through the process till the tail end?
Okay, thank you, Edwin. So the objection process, first of all, the law prescribes the time within which a taxpayer may object. So the law prescribes that within 45 days from the date that you receive a tax decision is when you should file that objection. Now, the law also allows you to file for an extension in the event that the 45 days have elapsed and probably you are not in time, you may request for an extension to file that objection. So within 45 days, let me assume that you're in time, you're following it as it should be. You file that objection online, you receive an acknowledgement by URA that you have filed that objection. That objection will go what we call a validation process, because URA, the team that I head or that I lead, goes on to validate your grounds, whether or not they should take that up for review or the decision that URA took at that moment is whole and final. And so they do file that, we validate it, the taxpayer does get a notification. So then within 90 calendar days, which are also stated in the statutory timelines, the URA or the IRO team, which is the objections team, goes on to review, to make reconciliations, to dig, to research, to, gather all the data that they have to make a justified reason to make an objection, what we call the objection decision, which is delivered to the taxpayer electronically as well. I don't know if that answers.
Oh yeah, that certainly does. Thank you, Ruth. Taking us through that objection journey, we now get to see you don't just file, you follow through, engage the team so that you can have a very engaging objection decision. And to bring in Rhoda, a very key component of the objection process is information, taxpayer information, records, and the like. Do you mind just shedding more light on this information? What should taxpayers have those ends? Do I just walk to my lawyer and give him my grounds? That's all. Are there any key aspects I need to take regard to? If so, what information should I look out for?
All right. So in my years of practice, I think objection decisions really, they hinge on what supporting information you have. So the success or failure of your objection process will really hinge on the information and the supporting documentation that you have. And our tax regime is self-assessment. So whatever you put into a return, make sure that at least for the basics, whatever figures, information, anything that is contained within your return, make sure that you have support for it, for your claims and deductions, for if you are disputing something, an assessment from URA, make sure that you have the right information. The right information will follow maybe certain categories. For example, information on your income, information on your revenue, information on your expenses, deductions that you may have claimed within your return, most importantly, your audited financial statements. If you do not have audited financial statements, maybe your management accounts, bank information, bank statements, information on your assets and liabilities. So it's very important that you have the right information that is going to support your objections claim, and that you engage with the objections team at the URA. You simply do not take the information to your lawyer or your tax consultant. Make sure that you're interested in the process, that you follow up, you follow through, and hopefully you get a decision that is in favor for you.
Thank you, Rhoda. I think Rhoda confirms, you need to have the information that speaks to your grounds of objection. That's very, very important. I just want to bring in Bruce. Bruce, one common thing we see in the URA is the law prescribes them to issue any additional assessments within 3 years. The very law also asks taxpayers to keep the information for 5 years. But one common thing we see, URA always wakes up and says, no, we've discovered new information, we raised assessments for periods even as far as 5-10 years ago. And that's a common practice that very many taxpayers are grappling with. So Bruce, would you just like to shed more light on what is new information? When URA says I've discovered information, what are we working with? What does this entail?
Thank you, Edwin. You're right. A lot of taxpayers always have a challenge with URA going back more than the period prescribed in the law, which is past the 3 years. Like you rightly mentioned, under the law, you're supposed to file a self-assessment. Once you file your self-assessment, then URA has a period of 3 years within which it can come and issue an additional assessment. However, the law also allows them to go back past those 3 years in case they are able to show that, one, there was fraud, two, there's new information they have discovered, or three, there was willful neglect. So you've asked me about new information, and new information is an interesting aspect. I'll give you just a practical example of the Kampala hospitality case, whereby the taxpayer had been filing returns, and now URA goes in and says, I have looked at your returns and discovered there's something that you weren't doing correctly about 6-10 years ago. Have they discovered new information? The tribunal is saying, no, there's nothing new that the URA has discovered. What they have actually done, they have relied on the information I have been giving them previously and used that information now to assess me. And the tribunal is saying, no, that's not new information. New information has to be something that URA didn't see previously, or that the taxpayer had and it did not share with the URA. That would amount to new information. And on that basis, URA can reopen the 3-year period and an additional assessment.
Thank you, Bruce, for that insightful response. I think the discovery of new information is a very contentious area, but how do you go about it? Just have all the information, have your returns rightly filed, have the support documents. So by the time URA comes, there's nothing new that discovery. So we continue to emphasize the gospel of compliance. So thank you, Bruce. I want to bring it back to Ruth. Ruth, you handle very many objections. Your team handles objections of all taxpayers. So could you mind just walking us through what are some of those common mistakes that you as the reviewers, you get to see that taxpayers are making, and these are costing them? Your objection decisions are coming into affirmed assessments. So what are some of those common mistakes that taxpayers are making throughout the entire objection process?
Okay, thank you, Edwin. I think what comes first off my head when you ask that is the unpreparedness. Taxpayers will file an objection and they have not properly understood the basis of assessment. They've not understood why they've been assessed, and therefore that means that they have not prepared their grounds of objection. And that's what my colleague Rhoda mentioned. That means that their documentation will not be in line with the grounds that they're presenting, and then everything will be mismatched and the decision will be made in the favor of URA. So the first mistake that I have observed personally over the years that I've worked under the objections unit is the failure of taxpayers to understand why in the first place have I been assessed. Is it an issue of loans? Is it an issue of underdeclared sales? And if so, what drove URA? Where did that undeclared sale come from? So that lack of understanding why. Now, those 90 days within which URA has to make a decision are IRO trying to help you understand why you've been assessed, establishing what documents you need to bring. Then you have to go and dig those documents. By the time you bring, we've run out of time. There's no exhaustive review, and the decision is probably not fair for you. Another common mistake is unresponsiveness. You see, an objection is triggered by the taxpayer. And so when you file an objection, it's an appeal actually. The expectation is you come and follow up and etc. A taxpayer will go AWOL, completely mute. You call them, try and email them on the registered known addresses, and there is just simply no response. And so most of the time, I don't want to say most of the time, about 10% of the cases that we have resolved are because of non-responsiveness from the taxpayer. So those are the two commonest mistakes to the taxpayer. But data, information is also another mistake. Taxpayers don't have information, meaning they are running businesses without proper records, and so when you file an objection, you just cannot support your grounds. You have your story, but you cannot back it up with any information. And then objections is a unit that is literally run on evidence based. Okay, so because you have a taxpayer that's disgruntled, you have an assessing team that is very confident of their assessment, and so you have to meet them. The only way to meet them in the middle is by having full evidence. Those are the common mistakes that I have observed over time.
Thank you, Ruth. That's very insightful. Ruth is giving us a feel of the mistakes that we taxpayers make, and it's very, very important of us to take note of those mistakes so that we rectify this. But Ruth, taxpayers would like to, if I want to rectify some of those mistakes, what are some of those tips you would give taxpayers to do good the bad that they're doing during this objections process?
Okay. I think the first thing, even before you think of an objection, is keep records. Keep records of the transactions and your businesses so that in the event that an assessment is raised against you, you are able to track and be able to support your objection because you do not agree with URA. That is the number one. And then when you file an objection, you need to understand that it is statutory bound. It is 90 days, not 90 working days, 90 calendar days. That actually reduces it, if you ask me, to about maybe 60. And so you're working within a limited time. You're working with a team that is handling many disputes at the same time. And so whoever is proactive in their review, chances are high that I will pay attention to that person rather than the person that I'm going to call, email, and there's no response. But there's this gentleman who's walking in every day and following up and is interested. He's active in the review. So it's not a matter of filing your objection and you sit back and say, let me wait for the URA to get back to me. It is nice to be proactive and active in the review process.
Thank you very much, Ruth. I want to bring in Rhoda first, then Bruce on the same question. So Rhoda and Bruce, we see this common thing of taxpayers. I know my case very better. I don't think I need a tax consultant. You guys are very expensive. So I just want to pick your mind of, are you guys very necessary in this objection process? Yeah. Just want to pick in what's the critical role of a tax consultant during the objection process?
Okay, I think that's a very important question, Adrian. And I would say that the role of a tax consultant is, why you will need a tax consultant basically is tax consultants understand the law and they understand the tax regime and the tax provisions. They will also walk you through the objection process. So sometimes you may not approach URA directly, but if you have a tax consultant who is going to walk you through the objection process, make you get aware of the timelines that are involved. What kind of objection are you going to lodge? Is it going to be a manual objection? And what reasons do you have for lodging a manual objection? Is it going to be online, utilizing the online processes that she was talking about? I think also the fact that tax consultants have done this so many times, they know NACAWA, they know the URA tower, which can be very confronting for a taxpayer to go to you don't know which floor you're going to go to. You know, there are 19 floors at NACAWA. So, and they have interacted with these UR officers, they know them. So I think your matter is better placed with a tax consultant who has built rapport with the URA officers, who is going to guide you and hold your hand, who is going to look through your information that you have under records and say this deduction, you claimed it wrongly, this was wrongly added back, so that even when you're going to URA, your case, the supporting documentation, you have gone through everything. I think that's where the value of a tax consultant lies.
Thank you very much, Rhoda. Bruce, want to pick your mind on the same?
Yeah. I think I'll just pick up on what my two colleagues have said. The value of a tax consultant, like Rhoda is actually mentioning, is that many times you have a taxpayer who just does the online objection and stops at that. Now, in case you have a situation where URA issues an objection decision that doesn't agree with that taxpayer, the question then becomes, for the tax appeals tribunal process, what grounds of objection have you actually put there? Many times, if you just did the online objection, you're not able to expound on the grounds of objection.
Right.
If you can't expound on the grounds of objection, URA is not able to make the right decision, which could possibly actually favor you. So it's easy to go online without a tax consultant, and I'll just be able to type in and say, I object, and maybe put one sentence and stop there. With a tax consultant, however, I'm able to go the extra mile. I'm able also to go ahead and prepare a detailed ground of objection, which not only helps the URA team, it also helps the tax appeals team. Now, the challenge happens when you're in the tax appeals tribunal with just that one pager. They'll be asking you, remember, they are now moving from the URA to tax appeals tribunal. They'll be asking you, so what is the basis of your objection? And it's a one page and they cannot expound on it. So you need a tax consultant to help you to come up with that detailed process, which assists everyone to make the right decision.
Thank you very much, Bruce. Bruce just confirms the fact that the tax consultant's role is very critical in seeing to it that we have a very valid objection decision, but also very importantly at the tax appeals tribunal, you don't want to be bogged down into these legalese. Just have a consultant guide you through the process, and the teams are ready to do that. And to bring in Rhoda. Rhoda, we've seen a new dispute resolution in courts mechanism being introduced in this tax process, particularly the ADR. And very many taxpayers are very, very grateful for this mechanism. They're saying Ruth and her team, those guys are very hard. At least ADR, these guys are nice to us. They allow us to give us, they give them more information. So do you mind just walking us through this ADR framework in tax disputes? Break it down for us so that taxpayer out those ends who has never heard of ADR, the want to partake of the same, can follow through. Okay.
So ADR, which is Alternative Dispute Resolution, has been introduced. That comes in, I would say, between the process of objection and going to the tax appeals tribunal. And I believe the purpose for ADR was to make sure that disputes, even before going to the tax appeals tribunal, are resolved as much as the team at URA can. So in terms of the timeline, when you can access ADR, so if you have obtained your objection decision from her team, then you have 7 days. Those are not working days. Those are calendar days. So you have 7 calendar days. That means if you got your decision on Friday, you must count Saturday, Sunday, and any public holidays in between. So you have 7 days within which to write your grounds for accessing ADR. And then after, you can lodge your ADR application with the team at URA. And they usually get back to you pretty fast. And usually the supporting documentation you may have submitted at objections will be very useful for you to take the same to the ADR team. Hopefully, they look at it objectively and give you a decision. And in terms of getting a decision from ADR, they do not have a timeline within which to get back to you. But most cases, we see that they will get back to you maybe within 2 months. And maybe what is unique about ADR is the time within which you must access TAT, that's the Tax Appeals Tribunal, is still 30 days. So do not think that because now I have lodged at ADR, I will first wait for a decision from ADR for me, then to assess whether I need to go to the Tax Appeals Tribunal. So we find ourselves in a case where we need to advise our clients to pursue these two appeal processes concurrently. So you lodge at ADR as you prepare for your time at the Tax Appeals Tribunal.
Thank you very much. Rhoda's spelled out for us the ADR process and how it looks like. And we believe very many taxpayers are exploring that option, and there have been a few credible results. So I just want to bring in Bruce. Bruce, from your vast experience, you handle matters at TAT, objection, and ADR. Just give us a feel of the ADR process. What has been your experience like in handling some of these ADR matters? What are some of the challenges with the ADR process? Just give us a broader feel of what your experience in the ADR process looks like.
Okay. Thank you. I think the experience of ADR is so far good. The challenge that we have had with most taxpayers is that they find it difficult to understand how URA has issued an objection decision, and the same URA, I'm going to the ADR team, and I'm hoping to get a different result. That has always been the challenge. What they seem not to understand is that the assessment team is different from the objections team, is different from the ADR team. So I think the way URA has structured it is really to assist the taxpayer, to have that, okay, the person who assessed you was the first base point. The second base point is going to be the objections team. And then thirdly, you have the ADR. So in terms of from where we sit as tax practitioner, yes, ADR has been very helpful in some instances. Of course, there have been instances where we have had issues, especially taxpayers who keep on going through ADR and exchanging information with the URA and hoping that that is extending the 30 days that Rhoda has talked about. Well, that doesn't necessarily extend it. And if you look at the ADR regulations, is that they are not a basis for which you can say, my time to go to the tax appeals tribunal has been extended. On the contrary, if you don't file your application within time to the TAT, you'll be out of time and ADR will not be your rescue. So whereas ADR is extremely important and whereas it has been very beneficial, I think the taxpayer out there needs to know that at the end of the day, it's not going to be the reason that time is extended. I know that there are cases where we have said that new information was requested by URA, but until URA makes a decision in ADR that is different from what came from objections, the decision in objection stands and therefore it is binding on the taxpayer and he should run within 30 days.
Thank you, Bruce, for those wonderful insights. I think Bruce is giving us a practitioner's view, but still, Rhoda, you're a practitioner as well. And audit firms, you always carry on clients in reconciliations, objections. You're deeply involved in this dispute resolution process at that level. Do you mind also just giving us a feel of your experience at ADR? What has been your experience like with taxpayers, with the ADR officers?
Okay, I would say that the experience for our clients has been mixed. So we will have instances, and this, interestingly, the results from ADR will depend on how close they are to their financial year close, I must mention. So when you approach ADR at around, May, June, chances are that the decision you're going to get from ADR is not going to differ from objections. So this might be maybe conjecture, but I have noticed that. So what we usually do is at ADR, you will definitely need to identify the officer that has been allocated to your case. So that's where also the tax consultant value comes in, that they will be able to identify for you the officer, and you must be proactive. You engage with the officer, they will call you, maybe set up a meeting, go with your information, your documentation, why you believe that you need another audience before ADR so that they can relook into your matter. If it's matters of reconciliation, I'm really hoping that we shall see this being resolved at ADR and at objections as opposed to them going to the tax appeals tribunal. So ADR, it's really mixed. It depends on very many factors for you to get a positive outcome or a reversal of the objections decision. But we are hopeful that with time things will get better and we'll get more objective decisions from there.
Thank you, Rhoda. I think the practitioners are confirming that, ADR is certainly doing good out of those ends, and we hope the process gets more fulfilling. But I just want to pick in, Ruth, your experience. Is ADR being seen as an indictment on the objection process? How is ADR being accepted at the tower? What's your experience of the ADR and vis-a-vis the objection process? What's ADR doing that you're not doing?
Okay, so In my opinion, I think the ADR is actually a very good gesture or good addition to the appeal process. Now, the objection process is limited by time. I can't stretch that enough. I can't stress that enough. The fact that we're on TikTok, 90 days, we must make a decision. And like I've shared with you all those the issues and the challenges of taxpayers who object, who are unprepared, have no clue on their basis of assessment. They're using those 90 days to literally understand their basis and then try and file that objection and all that. We're trying to beat the timelines. Now, there are events where a taxpayer on the 90th day has given you information that you very well can see is able to change the decision. But because of that statutory timeline that is tagged to us, you may not use that information or review it or consider it. So the ADR, the introduction of the ADR kind of helps in that area where a taxpayer has now an avenue where that information that was not reviewed or did not reach in time, but the taxpayer was trying to dig it up or not try to collect it from the different areas, is able to. So for me, the ADR is actually a very good one. It helps the taxpayers in the event that we missed something. At the objection stage, it can be addressed at the ADR. We've had instances where we actually advise, the ADRT and say, on this case, this is actually what we missed. Can you please pay attention to it? And then it is to the advantage of the taxpayer. At the end of the day, we're trying to resolve a dispute, a tax dispute. Yes.
Thank you very much, Ruth. I think to the ADR team at the URA, we give you your flowers. You're doing good, and your good is being seen. Broadly, the taxpayers, the consultants, kudos to that. I just want to bring in Bruce. Bruce, when the Tax Procedure Code Act was amended to introduce ADR, we've now lately seen two processes running concurrently. The taxpayer will file his ADR application. At the same time, to meet the 30-day timeline, I'll proceed and instruct Bruce to file a matter at the Tax Appeals Tribunal. So, Bruce, what has been your experience with such a practice? What's your view of these concurrent proceedings that we're seeing very many taxpayers subject themselves to?
Yeah, the concurrent proceedings are actually welcome because the Tax Appeals Tribunal is an informal court process. So literally what they want is that they want the parties to, as much as possible, to have a discussion. Many times clients think that if I go for ADR, then I cannot go to TAT, or if I go for TAT, then I cannot go for ADR. And the answer to that is that no, you can actually file in ADR, but also within the 30 days, you're able to go to the Tax Appeals Tribunal. And the whole reason behind that is that there are many issues that can be resolved in ADR that don't necessarily have to go to the Tax Appeals Tribunal. For instance, if we're arguing over a ledger reconciliation, did you pay the tax or not? I mean, what is TAT going to do with that? Yes, Ruth might come in and say, man, my deadline is fast tracking. I have 90 days. I must file my objection decision. But at the end of the day, the question is, okay, the objection decision was made. But you as the taxpayer, what is the basis of the assessment? The basis of the assessment is that when I do my reconciliation in the ledger, I'm not able to see that a withholding tax was paid or the VAT was paid. But now that I have a second look at it, as the ADR team, I'm able to go in and actually see that, in fact, this tax was paid. So if I am able to utilize the ADR space, then I can also assist the Tax Appeals Tribunal in reducing the backlog they have. The good thing with the Tax Appeals Tribunal, once the parties agree at ADR, they can always file a consent judgment.
Yeah.
So we don't need to wait for the tribunal to make a decision. The parties can always agree. So the two processes can be handled hand in hand, and most times it results into a better resolution of the matter.
Thank you very much, Bruce. To that taxpayer who was thinking of which of the two can I take, the safest bet is take both. So, Rod, I just want to bring in still on ADR. So, some taxpayers will come in, I don't have the 30% to go to TAT. Let me go to ADR. I don't have 30%. I can go in up in arms. 30 days down the road, there is no ADR decision. You're still in meetings. It comes 9 months after. So, Rod, what advice do you have for those taxpayers after ADR? Yeah, you've subjected yourself to it. The ADR decision has come. It's not a welcome one. It's maintaining the liability. So, what are you telling those taxpayers in such a scenario?
I would say we must embrace the concurrence that Bruce was talking about. As you file at ADR, please file at the Tax Appeals Tribunal. And in case you're limited by cash flows and you're having issues with, accessing cash to pay the 30%, URA has put in place certain mechanisms. For example, a payment plan for the 30%. You can negotiate up to 4 months, sometimes 6 months, so that you can then be able to approach the Tax Appeals Tribunal and pay the 30% under a payment plan with URA. What we do not want is for you to close out your opportunities and your avenues for appeal. So you must pursue every other possibility of getting a good decision by going to ADR and also filing at the TAT at the same time, so that you're within time.
Thank you very much, Rhoda. I want to bring in Ruth. Ruth, the feedback we're getting from some consultants is we have issues with the tax, with the objections unit. And some of the concerns they raise are threefold. Firstly, every time the year-end deadlines are drawing closer, you guys rush to issue decisions. Taxpayers would avail information. The other is lack of independence. Some people claim business policy has guided, so that's a decision we take. Whereas under the law, you're meant to be independent. Yeah. The other is taxpayers are not given time. You submit information, the objection officers do not review it, do not call us for meetings. So what's your take on some of these allegations being raised against such a fundamental unit at the URA?
Well. Okay, that's a very interesting one. Yes, we have indeed received some of those complaints. And of course, as the leaders of the section, there are continuous ways or processes that we try to bring in to ensure that a taxpayer receives a fair hearing at the objection, or that the avenues are really opened up. So indeed, we have come up with standard operating procedures. Before an objection is closed off, there's a committee there. And even especially when we're disallowing an objection based on either failure to submit documentation, there must be evidence of attempts to engage the taxpayer. There has to be physical evidence that you have either given this taxpayer fair hearing, fair time, and all those things. And the event that they are not, worst case scenarios, the law still allows us as URA to extend that matter beyond the 90 days. So when the cases are presented to the committee and it is observed that this case officer did not, was not fair in their time, or did not review a certain document, or it is on our side as URA, like we did not be exhaustive in our review, then we have the power to actually evoke Section 26(9), where we say we're going to extend this review beyond the statutory timelines, and that happens. Then we'll be able to follow those. So there are very strict standard operating procedures that we've put in just to tackle that issue that you are raising. Right now, the independent review of objections is under the business policy division. Okay, so why is that? Because these are tax disputes, divergent ideas, opinions, or interpretations of the law. And so it was wise for management to put that unit in the business policy, which is like the legal department of the domestic taxes department. So theirs is to interpret for us rulings and interpretations and etc. So our decisions now are made better with consultation from the rulings and interpretations team.
So Ruth definitely confirms that the objections unit is listening to your concerns, and they have gone ahead to put in steps to see to it that some of these concerns are addressed. And that's very commendable, Ruth, and the entire objections unit. So I want to bring in Bruce. Bruce, the other department, the other arena we see that is getting heaps of praise outside the ADR is the Tax Appeals Tribunal. That's an arena you appear, I think, on a week. You're there like 3 times or something. Do you mind just giving us a general assessment of the Tax Appeals Tribunal in this day and age?
Okay. The Tax Appeals Tribunal, like I mentioned earlier, is really an informal tribunal. Because it's an informal tribunal, they do not follow the strict process that we follow in the High Court. And as a result of which, it enables there to be a lot of interaction. One of the things that they have now brought, which I find very innovative, is that when you file your case, at scheduling, you have to come with your client. You know, in the past, what would happen is that, Edwin, you'd instruct me, I go to court, and I'm not with you. So when I reach there for scheduling, they are asking me questions, and I don't have some of those answers. Because many times, these disputes that we have with URA can actually be resolved at scheduling by somebody saying, yes, you wanted this document, like Ruth is saying, you didn't give me everything. If you had given me everything, probably my decision would be different. So all they are saying is that now at scheduling, there's a document that I needed. The chairperson will most likely tell you, can you please avail it? And ask the objections team, how much more time do you need to come back with a resolution? So the Tax Appeals Tribunal has, one, changed the process on how to handle a dispute and made it more taxpayer-based. In addition to that, there's also the mediation. You know, we've all been talking about the ADR, but there's also mediation in the Tax Appeals Tribunal. That still gives a taxpayer an opportunity to interact with the URA team without necessarily going back to URA for those taxpayers who believe that ADR is not independent. Now, the other thing that the Tax Appeals Tribunal is getting a lot of praise for is the speed at which they are giving decisions. You will notice now, every time you look at the cause list, there's at least 2 or 3 cases where there's a ruling. So what that is doing is that it's reducing the backlog. Because me as a taxpayer, what I want a decision. I do not want to have a situation where I file my case and you take another 6 years before I get a decision, which is more likely in the High Court. Because of the backlog in the High Court, they can take 6 to 7 years just to give you a decision. But with the Tax Appeals Tribunal, they are starting to lessen that time, which is very helpful for the taxpayer.
Thank you very much, Bruce. And I think to the team at the Tax Appeals Tribunal, your work is very commendable. We are watching, we are following, and very many taxpayers are now subjecting their matters before the tribunal. There is comfort they are having. So kudos to the team at the tribunal as well. But Bruce, I still want to pick on your rich mind, still at the Tax Appeals Tribunal. There's been a very big disconnect on jurisdiction in tax matters. So you'll find an issue of, is it a tax dispute? Is it a dispute on a legal standpoint? And 2 decisions that stand out very clearly is the FuelX decision as well as the UPMAC. There's been a lot of disconnection. Which one is applicable? In what instances do you invoke any of those? So Bruce, you want to just speak more about jurisdiction in tax matters, particularly those 2 decisions. How do you apply them and in what cases?
Okay, when it comes to jurisdiction in tax matters, I'll start with the where do I file a case if I'm a taxpayer? Do I run to the High Court? Do I run to the Tax Appeals Tribunal? Now, the High Court and the Courts of Appeal and Supreme Court have been very clear. But when you have a tax dispute, the court that you have to start with is a Tax Appeals Tribunal. There have been instances where the courts have opened that up. For instance, if there has been a rejection of my private letter ruling, and I want to challenge the decision that has revoked my private letter ruling, where do I go? In such instances, I could go to the High Court. However, if I am challenging the assessment based on just the assessment as it stands, that one there, I have to go to the Tax Appeals Tribunal. Now, when I go to the Tax Appeals Tribunal, there's a requirement for me to pay 30%. And now 30% is on the amount assessed. Some taxpayers think that 30% is only on the principal. No, it's 30% on the principal, interest, or penalty, whatever the assessment value is. When it comes to the payment of 30%, like you rightly mentioned, there have been 2 decisions. There's been OPMAC, which is the Supreme Court decision, sitting as the Constitutional Court. There's also been FuelX, which is just the Constitutional Court matter. Now, in OPMAC, it was saying you must pay 30% before you go to the tribunal. In FuelX, they are saying that if it is a question, a legal question, then you don't necessarily need to pay 30%. In interpreting that decision, the Tax Appeals Tribunal has now said that if it is an issue of law, so it's basically a point of law, does the provision, the section X, provide for me to pay the tax or not? That one there, you might not need to pay the 30%. However, if we're arguing over a question of fact and law, I must pay the 30%. If I'm arguing over a question of only fact, then I must pay the 30%. So in terms of harmonizing the two decisions, I think the tribunal has been helpful enough to say that if it is a question of law, then you don't need to pay. But once it's a question of both mixed fact and law, you must pay the 30%. And if it's just fact, you must pay the 30%. Yeah.
Thank you very much, Bruce. And I think we're seeing these decisions coming in mainly because with 30%, taxpayers are getting very creative on how to beat around the 30%. So I just want to bring in Rhoda. Rhoda, still a 30%, it remains a very big pain in tax and litigation. So Rhoda, what would advise taxpayers out those ends? How would you advise them to handle 30%? Taxpayer comes to you, I don't have, the 30% is, let's say, 5 billion. I don't have that 5 billion, but I want to file my matter. So is there any way such a taxpayer can get redress before our courts? And if so, how should they go about it?
Okay, I had mentioned earlier that there are certain avenues that are still available to the taxpayer. For example, a negotiation with the URA for the 30% to be paid in installments. Because the issue of the 30% is really, URA is as interested as the Tax Appeals Tribunal in making sure that as you're approaching the court, the Tax Appeals Tribunal, you have actually complied with the 30% requirement. But there are avenues like getting into a payment plan with URA where they can give you up to 4 months. I must say that even those 4 months, you must make sure that with each month that's passing, you're honoring your obligation to that 30%, and then you'll be able to access the Tax Appeals Tribunal with a payment plan that is signed by both the taxpayer and URA.
Thank you very much, Rhoda. And just to bring in Bruce, Bruce, still back on the 30%. 30% remains a very big pain. So Bruce, also just to pick on your experience, how have you advised or how have you handled such disputes where a taxpayer comes to you, they don't have the entire 30%, but they have a very legitimate claim that should be before the tribunal? How have you handled such a predicament in tax litigation?
Okay, in tax litigation, what we ordinarily do, because once the objection decision is issued, then the requirement is that you pay the entire amount at that point. The avenue that we have is in the Tax Appeals Tribunal Act, which is if I am going to object or if I'm going to appeal against the decision, then I have to pay the 30%. But you rightly mentioned, many times the taxpayer has cash flow issues. Many times first of all, tax, you have not been planning that you're going to pay the tax. So it is abrupt. And because of that, what we have normally advised the clients is to apply, like Rhoda is mentioning, for the tribunal to give an order for you to pay that amount in installments. Of course, there have been concerns whereby taxpayers have thought that if I gave a security deposit, can't URA accept? The unfortunate answer to that is that no. And the courts have also stated it and say that the security deposit cannot be used in lieu of you paying the 30%. So the only option there is that you'd have to pay, if you don't have the money up front, pay it in installments, but you can't issue a bank guarantee or a bond as a proof that you'll pay the 30% once the dispute is resolved.
Thank you very much, Bruce and Rhoda. So Bruce and Rhoda confirming that you take your objection process very, very serious so that you don't have to go through a 30% pain attack. I just want to bring in Ruth. Ruth, the taxpayers who generally miss the deadline supposed to object within 45 days, the 45 days go down, they are not in position to object. So you as objection, do you handle any such scenarios? If you do, are there any considerations the taxpayers should take note of? Is the 45-day very strict? Are there any instances where you do listen to extensions? And if so, what are some of the considerations taxpayers should take note of when applying for any extensions of time to hand an objection? Okay,
thank you, Edwin. Yes, indeed, like I mentioned earlier, in the event that the 45 days are caught you off guard, for various reasons, taxpayers may not be able to see the tax decision in time. We have a channel of communication where sometimes taxpayers have a different tax representative and over time they've changed them. And so they are not able to find or see that tax decision. The law does, Section 26 of the Tax Procedure Code Act does indeed give the taxpayer the right to apply for an extension, to file their objection beyond the 45 days. And we do review those reasons. Most of them are because either they were out of the country or they did not see that tax decision in time, or they were not aware of it for any reason. So we're very lenient on that part, because our interest at the end of the day is to resolve a tax assessment that's on your ledger that you're not okay with, or you have a dissatisfaction to. So that makes sense for us to insist and say, no, we cannot give you that extension because of ETC. So when you provide a valid reason, we do indeed grant you the extension, a reasonable time within which, and our expectation is that you are fully aware and now ready to file your objection, and you'll be active, and we shall be able to review and issue a decision that is favorable depending on your supporting documentation.
Thank you, Ruth. I just want to bring in Bruce. Ruth has just confirmed to us they are a little lenient as long as you have very legitimate grounds. Bruce, is it the same feeling at the tribunal? After 30 days, the tax pays out those that miss the deadline after an objection decision. They now want to come to the tax appeals tribunal. So how does it play out at the tax appeals tribunal in terms of these timelines? What are the considerations? Do I just go home and count my losses? What are some of the considerations of the tax appeals tribunal in such matters?
So when it comes to the tax appeals tribunal, because you have that 30-day window, you expected that you will file your application within the 30 days. However, there are many instances where, because now we are running an online system, you might not see the objection decision. Because you don't see the objection decision, you probably are out of the 30-day window. When you're out of the 30-day window, the tribunal is a little lenient, but it has to be within a reasonable time. Reasonable time should be between 1 to 6 months. After 6 months, then more likely the tribunal will not extend the time within which you can file your application. The reason for that is very simple, is because, like all disputes, even when it's an informal tribunal, time is a factor of justice. The longer you take, the more you prejudice other people. So when it comes to the tax appeals tribunal, yes, you can apply for extension of time. You can apply for it for a number of reasons, one of which can be that maybe you instructed your lawyer and he didn't take action. The other one is maybe you are not around in the country, or for some reason your accountants who are in charge of looking up into the system were not able to see the objection decision. They have been a little lenient in granting a extension of time, but there are situations where they have actually rejected. For instance, a person who comes 2 years later, you've spent 2 years without filing your application after you've gotten your objection decision, the tribunal is more likely going to say no. There have been instances where we've had clients who have gone for ADR and spent 1.5 years. And then now they want to go to the tax appeals tribunal. And the tax appeals tribunal is saying, no, you had your 30 days window. You didn't utilize it. So it depends on the situation. Many times your grounds for extension of time have to be reasonable, and reasonable has to be something that is explainable to the tribunal.
Thank you very much, Bruce. And that speaks to my next question. Still, I'll start with you, then Rhoda. So, Bruce, lately we're seeing very many people appear before the tribunal to represent taxpayers, and I think it's very open. You don't have to be a lawyer. And we're seeing so many trends and practices, developments before the tribunal. So, what are some of those latest developments, practices that you're seeing at the tribunal? Something that was not there 3 years ago, from a tax practitioner's view.
Yeah, I think from a tax practitioner's view, like you rightly mentioned, anyone can represent themselves. If you look at the setup of the tax appeals tribunal, you have both lawyers, accountants, and other people who have worked in the Ministry of Finance. As a result, it is open to everyone. Now, the trends that I see that have really changed over the years is they have now started encouraging, maybe because of COVID, they have started accepting the online hearings. Many times you're dealing with multinationals and they cannot appear in person. In such instances, you can have them appear online. But also, in terms of the decisions, like I'd mentioned, the decisions have increased, but also the decisions that are really relevant to current practices have also increased. For instance, if you look at the latest decisions that have been dealing with international tax principles, what happens if I have a company X that is in Kenya that is giving me a service to Uganda? Is there a tax due What is the difference between the reimbursements and disbursements? Things that affect our day-to-day life. Because all of us here, at one point, you act for somebody. When you act for that person might ask you to pay a bill on their behalf. What do I have to pay VAT in such situations? What is the difference if, for instance, that money that I'm paying is for my own behalf? Me as a lawyer, I'm having printing costs. Can I say that there's no VAT on such matters? So I think in terms of the trends, yes, there have been so many trends, and they have been very helpful for all of us in the tax practice. Yeah, those are some of them.
Thank you very much, Bruce. And I think we all agree the tax jurisprudence definitely is growing. It's very practical, relatable, and we continue to commend the tribunal, the practitioner, as well as the taxpayers for subjecting some of these disputes so that we can get final resolution. Rod, I just want to pick up from where Bruce stopped on the latest trends. We've seen a common trend is audit firms. Previously, we all knew if I have a dispute before tax, I'll go to KA, I pick Bruce, I pick Oscar. But lately, we've seen very many audit firms go before the tax appeals tribunal. So I just want to pick on that. What are some of those latest trends, practices we're seeing in today's tax litigation before the tribunal?
What I will say is something that is welcome from the tax appeals tribunal is how fast they are disposing of the cases. Because we know that when you go to the tax appeals tribunal, the interest is not going to stop accruing. The interest will keep on building. So in the past, where you would wait for 2 years for a decision, you're getting your decision much earlier, so that either you pay the tax or you go home and you celebrate. So that is really important when you look at it from the perspective of cash and how it is going to cost the taxpayer. Another maybe instance that Bruce also talked about is the online. That is really helpful for taxpayers that are abroad or whose management teams are not available, that they are able to access the tax appeals tribunal from wherever they are. As long as you turn on your camera, you're good to go. So I would say those are the trends that we are seeing. And most importantly, also how effective mediation is at the tax appeals tribunal. Because if it's a matter of fact, matter of reconciliation, you will be allowed to have your inter-party sessions with URA so that you come to a consent. The consent is filed and the tax appeals tribunal's time is saved. So those are very interesting trends that we are seeing.
Thank you very much, Rhoda and Bruce, for picking those amazing insights. I just want to bring in Ruth. Ruth, I'm not sure if you also have online objection meetings, but just want to pick in from an objection standpoint. What are some of those trends you are seeing in today's objection proceedings? Something that was not there 3, 4, 5 years ago. Something that any tax practitioner out there and a taxpayer can pick on and leverage on.
Oh, well, I think from the objections review perspective, we did have a bit of backlog, by the way. And I think one of the things that we are working on, or the trends that I am observing, is a strict adherence to the 90 days, the 90-day rule. So it's very, very rare that we shall extend the case. And so we are encouraging, or we are seeing a lot of early engagement. Meaning, if someone files the objection today, within 7 days, they should be contacted. And now we're not leaving it to the taxpayer to be the one to initiate the conversation. We're now taking it upon ourselves to say, look here, you filed this objection, come, let's talk about it. Then indeed, we also have the online. I think COVID did change a bit of trend in that area. We've had instances where, like she said, the management team is not in town, and then we are bound by time. And so we have to have this meeting, we have to have this conversation. And so we have opened up that avenue of the online conversations. But usually, we have the tax representatives present with us, and then we just have a sort of dual meeting. I think those are the trends. I see a lot of there's that active trends like this one, by the way. Okay, the tax hubs. There's a lot of deliberate effort by the tax partners to sell this tax issue to educate people. What are your rights? What are your obligations? Like there's a lot of partnering between URA and the other houses, the audit houses and the legal houses, just to ensure that people are compliant. And I think that's a very good trend. Yeah, that's what I can comment.
Thank you very much, Ruth. And I think to all the taxpayers, practitioners, you're all doing a very commendable job, and we upload, you just carry on the good work. So that we better the practice, because a very safe tax practicing space is good for all of us. So I just want to pose a question to the three of you, and we shall follow that very order. So it's definitely the laws are there, the decisions are there, but there's always room for improvement. There are always gray areas that we need to turn around, reform, make some policy considerations, possibly even suggest amendment some of these gray areas to address some of these nitty-gritties in there. So I just want to pick from each of you. I'll go with Bruce first. So Bruce, the three processes, there's ADR, there's objections, and there's TAT. So what would be some of your suggestions around each of those? How can we better the objection process? How can we better the ADR? And lastly, how can we better TAT?
Okay. To begin with, I think tax is a creature of statute. So some of the amendments that I would think at is that, to begin with, ADR. ADR, like all of my colleagues have mentioned, is time-bound. You're supposed to go in within 7 days. But remember, this is an alternative dispute resolution. If you tell me I have to be there within 7 days, what happens if I can't make it within 7 days? Are you going to lock me out? Isn't this a process where you'd want to open it up? Don't restrict me in the 7 days, because Ruth is telling you, yeah, I had my 90 days, but I have 1 billion clients to deal with.
Yeah.
So when Bruce brings his documents, if he's not vigilant, I could actually be dealing with something else. By the time I come to Bruce's document, the 90 days have clocked in and I'm not able to get to resolve it. So if you extend the ADR process to be like the objection decision process, I think that would be very helpful. Let it also be the 90 days. When it gets to the objection stage, one of the things that has now been introduced is that evidence that you don't include at objection stage, you can't include at the tax appeals tribunal stage. The problem with that is that you have a taxpayer out there who doesn't have a consultant. Rhoda and I are not advising that taxpayer. That taxpayer will go online and just click. But now when they go to the tax appeals tribunal level, the tax appeals tribunal is telling them, okay, what are your grounds of the objection? And they're not able to articulate them. I think that we need to have a process where we are a little lenient with the taxpayers, so that you have a situation where if I wasn't able to file grounds at the objection stage, I should be able to file them even at the tax appeals tribunal stage. Because remember, tax appeals tribunal sits in the shoes of the Commissioner General, so they can also review that evidence. Finally, when it gets to the tax appeals tribunal, one of the things that I would seek reform is when you have an assessment out there, interest starts to run from the day your tax was due.
Yeah.
The longer the tax appeals tribunal takes to resolve a matter, the more the interest is growing. I would have a law that says that within 6 months, a dispute in the tax appeals tribunal should be resolved. I know it's there for the appeals stage, but we haven't even had that in practice. Because, in court of appeal, a matter is supposed to be determined within 6 months.
Yeah.
But I can assure you, I don't know of any decision in the court of appeal, tax matter, that was determined in 6 months. So those are the key reforms that I would have.
Thank you very much, Bruce. Bruce makes very fundamental areas of reform, and certainly we believe the policymakers, the lawmakers, the law implementers are listening, and we believe these are areas we shall implore them to take keen note of. Rhoda, I want to bring in Rhoda. Rhoda, you're actively involved in this space. What are some of those areas you believe deserve amendment, be it objection, be it in the ADR, be it TAT?
So I'll go for the ADR. I agree with Bruce for the amendments he wants to see at TAT and objection. For ADR particularly, since it's something that has not been there for a very long time, I believe it's very important for us to measure both qualitative and quantitative successes at ADR. If you see that taxpayers are skipping ADR and preferring to go to the tax appeals tribunal, why is that? The decisions that come from ADR, sometimes you'll get a decision that is maybe three sentences, upholding objection decision. You have not elaborated why you're upholding it, where I could have maybe provided more information, or you will also get a team perhaps that is not as engaging with the taxpayer. So the taxpayer out of the blue gets a decision that is not elaborated, that is not explained. So I would want to see that from ADR as well. Give me a well-reasoned out, well-explained reason why maybe you're upholding the decision of the objections team. And lastly, in terms of measurement, we want to see, and this information should be available to the taxpayer, is there an uptake for ADR? And if so, what are the reasons for the uptake? Is there a decline in taxpayers accessing ADR? And what can we do as URA to make sure that there's goodwill, there's trust in the ADR process? Yes.
Thank you very much, Rhoda. Those equally are very insightful recommendations, and we take in note of. We believe it will be a step to improving our practice.
Yeah.
So I want to bring in Ruth. Ruth, most of the times URA is always on the receiving end, but you as URA, you as someone who has been on the receiving end. What are some of those areas you believe deserve amendment in this day and age, be it at the objections level, be it at ADR, be it at in the broader dispute resolution space?
Okay, thank you, Edwin. I think my colleagues Bruce and Rhoda have really exhausted most of the points that I would have loved to share. I just want to point out the issue of that section, the one that bars us at the objection level, not to review a document that was not provided for at that assessment. I feel like sometimes it gets counterproductive, especially if I cannot review it. That means it has to go to TAT, and TAT will agree to receive that document, and then it will send us back into mediation. Yeah. And so you realize that the 90 days at objection completely wasted, the time at ADR completely wasted, and then court. So that is a delay in revenue, okay, on the part of inside out looking, and then also the part of the taxpayer, that is interest accruing to them, So that's the only addition that I would make to Bruce and Rhoda here. But also the ADR, what I would imagine would make it even better is tagging timelines to it.
Yeah.
Okay? If there's a way we could tag an ADR decision for it not to stretch out, Remember, it does not negate your TAT requirement.
Yeah.
So is there a way we can align that in terms of stages? Like if a taxpayer has missed ADR, are they able to catch TAT in time? Because like he said earlier, most times the taxpayers imagine that if I go to ADR, TAT is sorted. So what happens if ADR's decision comes after the 30 days have passed, and then you have no reason for the extension to be granted? So there needs to be an alignment in that area to make the dispute process, chronological.
Thank you very much, Ruth. Ruth equally makes pertinent, insightful, and candid recommendations. We believe that will be that will be a step in improving our tax terrain, our tax dispute resolution space. So, ladies and gentlemen, the debate over here will be coming to an end, but we hope our discussion has generated debate. We hope the tax practitioners, the taxpayers, the tax implementers, the policymakers, everyone is following. There is need for amendment. There is need for discussion, some of these gray areas, but certainly also we've had a very candid breakdown. These practitioners have been kind enough to break down for us each of these processes, the key considerations, the key steps that we should take regard to. That's very, very commendable. So from all of us at the Tax Hub, we're very grateful to, firstly, Mr. Bruce Musinguzi. Bruce, you made the time to come in here, share with us your vast experience. So we are very, very grateful to you, Bruce, and the team at KAA for making the time to attend episode 4 of the Tax Hub podcast.
Okay.
To my friend Rhoda, it's always very good to have an audit firm partake in such discussions. You give us your rich experience on how you guys partake on this, and your discussions, insights, and recommendations have been very, very helpful to our discussion. Thank you very much for making the time. We're grateful to you and the team at KPMG for joining us this afternoon.
Glad to be here.
Thank you, Rhoda. And lastly, to Ruth, URA is always playing the hard game, but at least lately we're seeing they are open to such discussions.
Yeah.
They make the time, they're very involving. They also make suggestions to improve our space. That's very commendable. So to you, Ruth, and the broader team at the objections unit, that's a very critical unit in tax dispute resolution. You made the time to join us, partake, and also contribute to improving this space. So we're equally very grateful to you, the objections unit, and broadly to the URA, Uganda Revenue Authority, a critical stakeholder in this process, and we're very, very grateful to you.
All right, thank you.
Thank you, ladies and gentlemen. That wraps it up for episode 4. Do not forget to subscribe to our YouTube channel, the Tax Hub UG. Like, share, comment, so that you can bring to you such pertinent discussions, insightful, comprehensive, but most importantly, where we get to break down, simplify, and lastly, we don't just stop at that. Discussing is one, but we go ahead to suggest areas for improving our practice, areas for reform, areas for amendment. So that wraps it up for episode 4. Episode 5 is in the offing, and we look forward to engaging you. Thank you. Have a good afternoon.